Sandeep, let's begin with some of these IT names itself. JP Morgan believes the R&D companies, the likes of Persistent, Tata Elxsi, etc., have run up ahead of their fundamentals. Do you concur?
Yeah, so what always happens is that in an industry which is going through a tough time and only a few companies are performing, the investors as well as speculators tend to flock towards those stocks, which creates a valuation bubble of sorts, which we could say is there in these companies, but they have also surprised in terms of their growth, etc. So the jury is still out how whether they will fall by 30-40%. It is tough to predict, but upside looks limited at this stage, given their sharp outperformance and the fact that discretionary spending cuts are still at play among companies. So IT companies will suffer in the near term because of that. And recent commentaries by US Fed officials also indicate further hikes possibly. That also could keep uncertainty in the minds of CEOs of corporations, which would again postpone decisions to spend on IT, which is postponable. So I think the time overall to buy IT still gets pushed back, and for these specific companies, the upside obviously is limited.
Indeed, still some time away before IT dark clouds actually get cleared. But Sandeep, what to make of this geofinancial demerger? The street is almost reading it as a precursor or, beginning of the process of the demerger of eventually geo and retail.
So I think people can read whatever they want, but my reading of the way Mr. Ambani has operated his business, Mukesh Ambani, is that they would like to keep everything under the same basket, unless and until there is a demarcation of the businesses among his children, and to that extent they need to demerge. So that's something which could happen, could not happen. But overall, Reliance had underperformed significantly, so I think that underperformance is getting corrected right now. And eventually, I think at 2750, maybe now the upside starts getting limited, and so from here, the upside I would think is limited in Reliance in the near term.
Upside is limited in some of the IT companies and Reliance. Then where is the upside, Sandeep? Which are the pockets which look still attractive, or even stock-specific names, if you can discuss that?
So I would think that on the large cap side, financials still have some upside. Stocks like Bharti, which have consolidated for a long time, could have some upside. The auto companies could still have upside. From a pure index level, from significant undervaluation in March, we are now into fair to slightly above fair valuations. So another 5% higher than the upside in the near term starts getting limited. So I think that's what we have to recognize. So then we'll have to play it time wise, see which stocks correct and buy into them. Capital goods side still looks good. So the moves have been slower, although the clarity in terms of growth has been growing. So I think something like L&T could continue to do well. But on the large cap side of the market, overall, the overall upside now seems limited, at least in the near term.
ICICI has come out with a note as well on Bharti. The target is now 1030 on Bharti, and it's a strong buy. They're saying that India's cloud market of about $6 billion is likely to triple in the next 5 years to almost about $17.8 billion, and that Bharti has been boosting their capabilities of cloud services with their growing partnerships. Their subsidiary, that's Nextra, is also targeting to triple their data center capacity to about 400 megawatt by 2025. And cloud and data centers are going to boost Airtel business growth and add upside potential. So therefore, this buy and a target price of 1030 on Bharti is what they have put. Kunal, quite a bit of consolidation of on Bharti, right? When do you see the stock hit that 4-digit mark?
There's actually been good momentum which has come back for Bharti Airtel. So, the stock which is, so you look at it from the March lows, I think the stock was at 700 or 720 odd mark. From there, the stock gradually moved on to that 800 levels. In the last couple of days, the volumes, in fact, yesterday, day before, the volumes for Bharti Airtel were at a multi-day high on the NSE. The stock yesterday made a high of 885 approximately, which was a fresh high for Bharti Airtel. So momentum, volumes, price trends, all of that is coming back for Bharti Airtel. And it's been a stock, we've discussed this over the last so many years, that it's been a stock which has been a very slow, gradual, and a moderate beta kind of a trend. So whenever Bharti Airtel tends to get into an upward trend, it's more of time-wise longevity rather than more of price-wise traction the stock sees. So I would believe that what we're seeing over the last couple of months for Bharti Airtel could actually be a start of a major multi-month uptrend. The volumes coming back and the price trends indicate that the stock should be good for more high returns on the upside. Now, looking at the average return, over the last 3 months, the stock tends to generate around 15%, 10 to 15% as an average return over, a period of 6 to 8 months. So we can expect that possibly another, 10% on the upside could be a near target for Bharti Airtel, given a time frame of 36 months.
Okay, many month uptrend is likely to continue on Bharti Airtel, but the stock which has been on a massive upturn for now has been Tata Motors. It's high by 60% this year itself, and most of the analysts on the street are still positive on the counter. And one such person is Pankaj Pandey as well. He's quite bullish when it comes to Tata Motors. Listen into his rationale.
I think it's been one of our top performers. Our target on Tata Motors is 700 rupees. Now, when you sort of look at JLR, volumes are 93,000. So I think it is better than what even the management had guided or even what we had taken at about 90,000 odd. And good part also is that on the domestic side, some of the laggard segment like CV, the volume growth was quite decent. And margin profile there is sort of improving for almost all the players. I mean, not only for Tata Motors, but even for Ashok Leyland or even for Eicher. So I think you're getting volume growth plus you're getting margin improvement. And I think given the fact that overall capex as a cycle is still looking quite good, so our sense is that Tata Motors will sort of continue to sort of do well, and along with yes, obviously you have triggers in terms of Tata Technologies getting listed. So I think we continue to sort of like Tata Motors, and our sense is that 700 is on the horizon for this stock.
Okay, so that was about Tata Motors. So quickly, let me take it across to Naresh. Naresh, your view on Tata Motors, you concur that it's headed to 700 plus. And since we're talking about stocks hitting 4-digit, when do you see that happening for ICICI Bank?
So I'll start with Tata Motors first. Now, the case is all of us have been bullish for quite some time. And now is the time where it can take a pause. Yesterday's price action was the first indication of a pause coming for the stock. Now, if you look at the speed of the rally, it was at 420 back in April, and now the stock went up to 630 level. So that's a more than a 50% move, or closer to a 50% move in the last 3 months, 3 to 4 months. The previous all-time high for the stock was around the 600 mark. It's tough for a stock to actually run away from previous all-time highs, which were made in 2015 to 16. So some bit of a pause around the 600 mark is expected. Could be a few weeks, could be a month or two also in this case. So I would expect some bit of a consolidation, and then maybe it crosses about this 630, 640 mark and makes a fresh move towards 750 also. So the trend is strong, the structure is strong, but a pause is needed after such a move. So waiting for a dip closer to 560 to 600 mark is where you want to start accumulating the stock again. Then coming to ICICI Bank, now this has been a stock which has been flirting with that 960 mark for the last 4-5 sessions also, and even the last couple of months. 960 was roughly the top back in December 22, also the top in May, June, as well as in July right now. Once it sustains 960, the next target actually comes out to 1100 plus levels. So 1000 is something which was just not far away as such, could happen quickly. But once it sustains 960, that would be a short-term cup and handle formation, which would have a minimum target price of 1100. So bullish on ICICI Bank, waiting for price action to confirm the breakout.
Vedanta, that's going to be the key stock that we're going to be looking at for right from the pre-open rates, I think. The manufacturing deal with Foxconn for semiconductors has been called off. Although we were chatting with Rakesh Arora from Macquarie, he believes that it was never going to materialize in any case, and this was a very, very ambitious project on part of the Vedanta group. But Sandip, sentimental knee-jerk, I'm sure, is going to kick in on Vedanta today.
Possible, but I think the jury is still out whether going ahead with that huge investment was better or this is better. That doesn't happen for Vedanta shareholders. In any case, I think the entire commodity market is a tough market at this stage, given what's happening in China. So, in general, it's a avoid kind of stock.
Okay, that's the view coming in on Vedanta and Sandeep's take on what exactly this news means. Meantime, just wanted to get in a chart check going then. And Naresh, your view on autos. In yesterday's trading session, it was across the board that the entire auto sector came under a bit of pressure. Maruti, M&M, Hero MotoCorp, what are the charts trending like?
So, in terms of auto, my view is we are going to see a new leadership come in. So, it was earlier about Mahindra and Mahindra, which did really well. And there was TVS Motors, which did well. Then it was also Bajaj Auto, which surprised. And now the new stocks which come up on multi-year breakouts, one is Ashok Leyland. Now, if you go back to look at Ashok Leyland, the stock was at 170 back in 2018. Also was at 170 in 2022. And just in the last 1 month, also a couple of times it has tested 170. So that's a huge cup and handle formation of 5 years plus. So this could take leadership. It is very similar to what Mahindra and Mahindra was when it started off that run from 1000 levels. And now Ashok Leyland could be the next one in the same segment. Similarly, in the two-wheeler space, it is about Hero MotoCorp. The stock finally showed momentum, broke out above that 2950 to 3000 mark, which was a resistance for the last 2 years. Also, the stock has done nothing from 2015. So this is a stock which could slowly and steadily go to 3600 to 4000 levels. So Hero MotoCorp is a buy on dips. Any retest of this 3000 band, the breakout area would be adding opportunity. So that is one. Last one is Maruti, which from closer to the 10,000 mark back in 2018, the stock has gone nowhere for the last 5 years. And again, testing that 10,000 mark in the last few sessions. So these are the three names which are making structural 5-year breakouts. And this is a basket and three different stocks from three different segments of auto. And this could be the new leaders going forward. So expecting one by one, these three of them to actually break out and create fresh trends.
So spotting the new leaders when it comes to the auto space. But Sandeep, just quickly wanted your take regarding car trade, if you track that one, because they've announced an acquisition to the tune of around 540 crores buying the auto business of OLX. What do you make of it?
I don't track.
Okay, you don't track it, but Kunal, do you track car trade charts? And other than that, Zomato, Paytm, PB Fintech as well?
I don't track Carted as such, Nisha, but I think on the new age stocks, Zomato, Paytm, as well as Policybiz, etc. We discussed this almost a week back when I mentioned that many of these stocks have come back into their overbought territory. Now there are two types of possibilities which could happen when stocks enter into their overbought territory after a steep run, after a run of more than 30 to 40% in a very short span of time. These stocks can go through a V-shaped correction, which could probably bring in a zone that there is more of reduction in the positions or profit booking which happens, or there is a time-wise consolidation which happens. What these stocks are actually going through is the likes of Paytm, Policybazaar, Zomato is more of a time-wise correction. And I think it's a good sign because in a time-wise correction, the indicators, they come back into a moderate zone or a mean zone. And that provides an opportunity to try and re-enter the stock again because the trends are almost intact. The position sizing is intact into the stock prices. So I would believe that this is a healthy consolidation which is going on for these new age stocks. I would still believe that the likes of Paytm could probably see an upside of another 10% over the next 3 to 6 months. Policies are extremely bullish on. Would look out for a target in the range of 775 to 800 approximately in the next 3 months or so. And even for Zomato, I would believe that the next leg of rally should take the stock back about that 80 plus mark.
Fintech, Zomato, car trade, those are some of the stocks that Kunal is flagging off on the charts. But Sandeep, wanted to get in your take on the kind of move that we've seen in some of these tire stocks with the fact that we're seeing raw material prices as well cooling off and pretty strong demand. Is the road ahead looking strong for some of these tire stocks?
Yeah, tires overall, I think at least companies like which are domestically focused with some exports and overseas operations like Apollo Tires, which remains the best company, followed by MRF, C8, and then JK. All of them have things going for it simply because of the fact that industry is now consolidating. People are not going in for aggressive expansions, and there's going to be cash flow generation across the board because uh, these companies have realized that if they keep on doing excessive capex, then it leads to prices being under pressure on the in the markets, and no one gains out of it. So all the large players have decided to take this stance that they are not going to be aggressive expansion. They're actually going to cut down debt, etc. So among these, Apollo Tires is something which we have held for a very long time, and I would still think that it should do well. But all others should also do well.
Right. You know, like Samit was just highlighting, the entire agrochem pack is going to be in focus. And FMC, which is the world's fifth largest agrochemical company globally, they've actually revised their guidance lower, citing reasons like high inventory built up in generic agrochemicals, the drop in prices to the tune of about almost 30 to 70% year on year, and the challenge then in pricing volumes for generic ingredients as well. How does it impact Indian companies? Well, surely the likes of UPL as well as Rallis do get impacted, and especially UPL, given that its portfolio is pretty much similar to that of FMCs. But Sandeep, would you say that a decline like this could be an opportunity to buy, maybe not immediately, but maybe some time ahead?
Yeah, I would agree with that. So I think 3-4 months down the line, when these prices have come off because of bad results, etc., we could buy them because these are cyclical industries. These are not secular growth industries. So you need to time entry into these stocks. So I think agrochemicals is a space which we cannot ignore, and we could look for opportunities as stocks correct. On the other hand, specialty chemical, I think they could be under pressure for at least the next 1 or 2 years.
So that's the take coming in on some of these agrochemical companies. But Sandeep, what's your view regarding the entire defense pack? They are back in focus on account of the Prime Minister's impending visit to France, and there's a large deal which is likely to happen there as well. We'll shortly get our colleague Srinjoy also to join us and talk to us about that. But your take as far as the defense pack is concerned, do you think they have run up considerably already, or there is still more upside in some of the names?
Yeah, so it depends on the time horizon of the investor. So I think for someone who has a less than 1 year outlook, I would think that the upside in many of these companies is very, very limited because it's become a very crowded space. All retail investors, everyone is just climbing onto them. You have specific funds launched for defense, etc. So I think typically that happens at the time when the sector becomes too hot. Now we need to wait for better opportunities to buy. For someone who has a 3-5 year horizon, they could still be upsides. But then after such humongous straight line upsides, normally corrective moves could also be severe whenever the market corrects. So I think people need to be aware of the risk while buying these stocks. Longer term outlook is still okay.
The word on defense, and L&T as well has said that it signed a teaming agreement with Spanish-based Navantia for the submission of a techno-commercial bid for the Indian Navy's prestigious P-75 India submarine program. Here's an excerpt from that event.
So this is, as you correctly and rightly pointed out, probably one of the most important programs for the government of India, our defense, our navy, and of course for Larsen & Toubro. We have been involved in this defense program over the years. Certain strategic assets are made by us. But having said that, that most important thing in all this is how to do a Make in India. And to the extent possible, Atmanirbhar and all these very complex programs. Though we have done quite a bit on our own, it is important that when you enter into a program like this, We try to maximize the Indian content of it. We found the right partner in Avantia, who's known to us for a very long time. We could enter into an agreement which ensures total transfer of technology, including the critical technology of Atmanirbhar.
This is such a major project. If you could give us a little detail about the project, how many submarines we are hearing, 6 under P75, where you're going to make them, what percentage of indigenization there will be. I imagine it will be gradual, it will be less initially and more towards the end. What the total costs will be. These are the 4 big moments.
Some of these, I don't think I can so explicitly say that, but as you correctly said, these are 6 submarines. Our factories and heavy engineering workshops in Hazira are already are capable of making it, and we are making some of these strategic vessels there. So this will be continued to be fabricated in what is called as the AM Naik Heavy Engineering Complex at Hazira. We have factories which are ready for it, which have the height and width and the gantry cranes capable for handling such huge diameters of vessels.
Okay, that's the word coming in from none other than Mr. Subramaniam from L&T. Sandip, we've often chatted about, the prospects of the entire defense sector. Some of these stocks have run up a lot, now concern in the market also about the valuations getting overage. But this sector aside, I just wanted to figure out, what do you see about the next fad in the market? That's the railway stocks. What do you do with those?
Again, on the railway stock side, many of the stocks have run up too much too fast. We do own a few of them, but then for new investors, I think they should try to. So I think timing becomes very tough when the growth paradigm has changed so much, and many of these companies which went into losses could actually be making hundreds or some even go into 4-digit crore profits over the next 2-3 years. So I think that's the challenge. How when stocks go up 4-5 times in a short period of time, what do you do? So I would still think that story is there, but then given the fact that some of these stocks which we also own, like Pitagar and all, like the stocks gone up almost 5 times in just 1 year. So it's tough for that to sustain. So I think there are two strategies. For people who are holding, there's no reason to sell because the growth outlook is still so strong. But for people who want to buy afresh, I think they should wait for dips because eventually when a sector becomes very hot, the dips will also come in between.
Sandip, good to have you on board. Thanks so much for joining in and sharing with us your outlook on the fundamentals as well as individual stock calls.